Okay, let's unpack this. Imagine the world's most luxurious empire, led by a titan of industry, suddenly facing a stunning challenge to its dominance.
Hmm.
That's exactly what's been unfolding in the high-stakes realm of luxury brands.
Yes, quite the story.
Our deep dive today is built around a fantastic piece from Forbes, written by Lillian Raji. Now, Lillian is a global luxury communications advisor, a fractional CMO that means she advises multiple companies part-time, and she's a columnist.
Very experienced.
Absolutely. For over 2 decades as president of the Lillian Raji Agency, she's been a trusted strategic advisor for some of the world's leading luxury brands. She also founded the PR Advisor, and her Forbes column, The Pursuit of Luxury, it really examines how these brands use emotional marketing to capture their, well, very passionate customers.
That emotional connection is key.
Totally. So our mission today is to truly understand how this surprising shift happened, what it reveals about the sort of new normal in luxury, and what essential lessons it holds for brands and for you, the consumer, alike.
What's truly fascinating here is not just the changing of the guard at the very top, but the profound implications this shift has for how luxury is defined, valued and pursued in what's becoming an increasingly challenging global environment.
Definitely.
This raises an important question. What truly makes a luxury brand resilient when faced with these kinds of widespread market headwinds?
With that broader context, let's zoom in on the specific drama unfolding. Bernard Arnault, often called the Emperor of Excess, his LVMH empire boasts an astounding 75 brands.
75. That's massive.
It really is. And he's seen his company dethroned by Hermès as the world's most valuable luxury company. And the irony here is particularly rich, considering Arnault's past. Pretty aggressive attempts to actually acquire Hermès.
Oh yeah, that history adds another layer, doesn't it?
It really does. So, LVMH's Q1 2025 results, they revealed a significant 3% organic revenue decline. It dropped to $20.3 billion, which is what, roughly $23 billion USD.
And that pulled down the wider luxury market sector too.
Exactly. And specifically, their core fashion and leather goods category saw a 5% drop. Even more striking, their revenue in Asia, excluding Japan, plunged a significant 11%.
Wow, 11%. That's a clear signal of pressure, especially in such a key market.
No kidding.
And if we connect this to the bigger picture, like you said, this isn't just an isolated incident between two luxury giants. It really reflects the significant deceleration across the entire luxury market.
Right.
Lillian's article highlights insights from a recent Launch Metrics webinar, where growth projections for the luxury sector have really plummeted. We're talking just 1-3% per year through 2027.
1 to 3%. That's a huge drop.
It's a stark contrast to the robust 5% annual growth that we saw between 2019 and 2023.
Yeah.
And what's even more significant, Lillian points this out, is that this marks the first time since 2016, if you exclude the unique circumstances of the pandemic,
Sure.
that luxury value creation might actually decline. It's a very different landscape we're looking at.
It certainly is. And meanwhile, in that exact same quarter, Hermès just galloped ahead, a strong 7.2% revenue climb.
Quite the contrast.
A remarkable contrast. They showed impressive growth across nearly all geographical areas and product categories. Europe up an impressive 13.3%, the Americas rising 11%. It's almost defiant compared to LVMH's struggles.
Defiant is a good word for it.
And that irony we touched on earlier, it runs deep. Back in 2010, Arnault, famously dubbed the Cashmere Wolf, orchestrated this stealth acquisition of Hermès shares. He eventually accumulated a 23.2% stake.
Right, trying to force his way in.
But the Hermès family fiercely thwarted his ambitions, and that led to that now memorable quote from the then Hermès CEO, Patrick Thomas.
Yes.
Said, if you want to seduce a beautiful woman, you don't start by raping her from behind.
Oof, not exactly subtle.
Not exactly a gentle approach to M&A, was it? It speaks volumes about the battle for control and, well, brand identity.
No, not at all. And that history really underscores the deeply personal nature of these luxury empires.
Yep.
This broader market slowdown Lillian outlines, she terms it a perfect storm of challenges.
Perfect storm. Okay.
Yeah. First, we're seeing market saturation actively diluting exclusivity. It's not just more brands. It means that perceived rarity, that uniqueness that defines luxury, it's just harder to maintain.
So consumers expect more.
Exactly. They demand more for their money. Secondly, there are significant macroeconomic headwinds, particularly in China. Economic uncertainty there has led to a more cautious consumer. Maybe opting for quiet luxury or investing domestically instead of in the big global brands.
That makes sense.
And finally, evolving consumer preferences. Experiences are increasingly trumping goods. People are prioritizing travel, events, unique moments over just accumulating more physical possessions.
Right.
Alison Bringjay, Launchmetrics CMO, she noted that even well-positioned brands are feeling the pressure. And the news, of Watches of Switzerland and closing showrooms, that just underscores the strain retailers and brands are facing. It's a crowded and demanding marketplace.
What's truly striking here, though, is how, despite these widespread headwinds, Hermès seems to be charting its own course. Lillian's article quotes Alison Bringjay emphasizing that the brand is the most important financial asset. And this seems to be precisely where Hermès truly has the edge over LVMH's vast portfolio approach.
Absolutely. LVMH, as Lillian points out, it thrives on acquisition and scale, finding efficiencies.
Right, which often means, constantly optimizing supply chains, production sites, all that stuff to maintain margins globally.
It's about managing a vast, diverse empire effectively.
Whereas Hermès is all about that exclusivity, that brand equity.
Totally. They've focused singularly on deepening their connection with consumers, prioritizing craftsmanship and heritage over just rapid expansion.
And Lillian highlights Hermès' profound investment in its artisans, maintaining workshops with no more than 250 employees. That's pretty unusual.
It is. It's about ensuring a pleasant work environment, really prioritizing that meticulous craftsmanship and the brand's rich heritage. It's not just about speed or scale.
They're building this fiercely loyal community, even to the point of Birkin bag lawsuits, where customers are so passionate about getting these exclusive items that legal battles have actually happened.
It really speaks to the depth of that connection and the perceived value, doesn't it?
It really does.
And this raises an important question about how brands effectively communicate and connect in this new landscape. Lillian's article, Drawing from Launchmetrics, details the voice-centric approach for brands that are successfully navigating these challenges.
Voice-centric. Okay, tell me more.
It recognizes the critical need for a multi-channel, multi-voice strategy, not just siloed marketing efforts. This approach outlines 5 key voices that impact the customer journey, each playing a distinct role.
Okay, 5 voices.
Right. First, celebrities. Great for initial awareness. Think of a pop star wearing a brand's new watch at some high-profile event.
Got it. Awareness.
Second, media. This builds both awareness and consideration. Articles, reviews exploring features appeal, making listeners think, could this be for me?
Okay, media for consideration.
Third, influencers. They provide legitimacy by showing products in relatable, aspirational contexts.
Yeah.
How it fits into a lifestyle.
Legitimacy, right.
Fourth, partners. Crucial for conversion.
Oh.
Retailers, collaborators, maybe loyal brand ambassadors who help facilitate that final purchase.
Driving the sale.
Exactly. And finally, owned media. Vital for retention and increasing share of wallet. Think newsletters, exclusive events, loyalty programs keeping customers deeply engaged.
Retention. Okay, so celebrities, media, influencers, partners, own media.
That's the framework.
And this is precisely where the philosophies of LVMH and Hermès really diverge, isn't it?
Absolutely.
Yeah.
While LVMH might leverage, big celebrity endorsements and splashy media moments like their sponsorship of the 2024 Olympic Games to achieve that broad reach,
Big splash.
Hermès takes a far more measured approach.
Mm-hmm.
They focus on deepening that connection.
As Bringjay notes, the most effective strategies strike that balance between reach, relevance, and resonance.
Exactly. While LVMH certainly achieves reach, Hermès' deep focus on storytelling, the tactile experience of craftsmanship, and building that profound community connection speaks directly to relevance and resonance, and that's proving incredibly resilient.
It's about earning loyalty, not just buying market share.
Precisely.
So what does this all mean for different parts of the luxury market? Lillian also highlights some fascinating contrasting trends within specific sectors, particularly jewelry and watches.
Yeah, that was interesting.
In jewelry, the premium segment saw really, really strong growth. We're talking 34% year-on-year in media impact value, MIV, actually outpacing traditional luxury brands in that sector.
34%.
Yeah.
Driven by smaller brands.
Exactly. Lillian explains it was driven by smaller brands that were more agile, embracing innovation, really leaning into what modern consumers want. It suggests nimble, focused brands can truly make a splash.
That agility seems key.
Conversely, watches saw the big luxury brands leading the charge, 17% year-on-year growth in MIV there.
So the opposite trend in watches.
Right. This was attributed to prominent luxury watchmakers adopting a consumer-centric, innovation-led approach, focusing on what that discerning buyer truly desires.
So it's not one size fits all across luxury.
Not at all. And a key takeaway here is how brands are adapting their strategies. Milena Lazera, a strategy consultant and luxury editor who joined Bringé in that webinar, she identified 3 crucial areas brands are focusing on to sustain impact now:
Okay, what are they?
philanthropy, culture, and stakeholder experience.
Interesting. Tell me more about those.
Well, philanthropy generates awareness and pride among employees and stakeholders. Think of a luxury brand investing in a community where they source materials. It fosters connection and trust.
Okay, building goodwill.
Then there's culture, elevating products in the brand into the realm of art and society, enhancing storytelling. Like a luxury brand sponsoring a major museum exhibit, it makes the craft about more than just commerce.
Right, giving it deeper meaning.
And finally, stakeholder experience. This means treating everyone who interacts with the brand, maybe a potential employee, someone just browsing social media, with the same care you'd give a VIP customer, recognizing they can all become powerful brand ambassadors.
Yeah, everyone's an ambassador.
Yeah.
That's smart.
Yeah.
It reflects a shift away from just performance marketing towards rebuilding those deep, authentic emotional connections.
It really does, and it's a compelling contrast, isn't it? LVMH's watches and jewelry division, it remained stable year over year in Q1 2025, even with the group's overall decline.
So they held steady there.
Yeah, but here's the interesting irony Lillian points out. While LVMH's jewelry and watches were stable, Hermès' watch métier actually declined 10%.
Oh, wow. So even Hermès wasn't perfect across the board.
Exactly. This divergence truly underscores the nuanced pressures and opportunities in different segments, perhaps a potential blind spot even for Hermès in an otherwise stellar quarter.
Possibly. And it directly aligns with the 5 key lessons Lillian suggests LVMH could learn from Hermès in this new environment.
Okay, let's hear them.
First, focus on brand equity over expansion. In a slowing market, strength of identity is more crucial than just having a huge portfolio.
Makes sense. Strength over breadth.
Second, embrace a stakeholder-centric approach. Treat everyone, employees, followers, browsers, as potential ambassadors. Foster that widespread advocacy.
Build that community.
Third, invest deeply in craftsmanship and storytelling. As consumers get more discerning, the story behind the product, the hands that create it, that matters more than ever.
The narrative is crucial.
Fourth, think like a media outlet. Brands need to create engaging content, build community, spark conversation, draw people in, don't just push product.
Be a destination, not just a shop.
Right. And finally, fifth, balance global and local strategies. LVMH's 11% drop in Asia shows the risk of over-reliance. Lillian's article mentioned unexpected growth in places like Norway.
Norway. Interesting.
Yeah, suggesting diversification and understanding those granular local nuances are more critical than ever.
So as the luxury market navigates this period of, well, unprecedented uncertainty, the very strategies that propelled giants like LVMH to dominance are being rigorously tested.
You really are.
Will their extensive portfolio approach continue to serve them in this new environment? Or will Hermès' singular, almost artisanal focus on craftsmanship and emotional connection prove to be the more resilient, long-term path?
That's the billion-dollar question, isn't it?
It really is. One thing is absolutely certain. In this high-stakes game of luxury, Bernard Arnault isn't likely to fold his hand anytime soon. The Cashmere Wolf may have momentarily lost ground, but you can bet he's surely already plotting his next strategic move.
Oh, absolutely. This raises an important question for you, our listener, as you navigate your own consumption and understanding of this market. What elements of luxury do you value most in this changing landscape? Is it the breadth of choice and diverse offerings that LVMH provides? Or is it the depth of connection and the singular story of a brand like Hermès?
That's a great question to ponder. And to dive even deeper into Lillian's incredible insights, you can find her full article on Forbes. Just search for The Luxury Market's New Normal: What LVMH Could Learn from Hermès by Lillian Rajee.
It's a fantastic read.
Absolutely. And for more of Lillian's additional analysis on the luxury industry, be sure to visit her website at www.lilianrajee.com. That's LILIANRAJI.com. It's really a treasure trove of information that will truly help you become more well-informed on this fascinating sector.